Hey, good evening, Kenna Tortoise Capital, nightly strategy podcast for August 5th, 2024. Market remains in meltdown condition. So let's see what we got. This is a time when we're emphasizing day trading, as we've been saying for a couple weeks. Uh, we have been reducing our swing trade positions. Oh, yeah, absolutely, Alex. We've been saying that for almost 10 days to really reduce the overnight exposure. One of the guides on that is the ETF2 system, the weekly, which is at a 10% recommended allocation. And when it's that low, that tells you that there's really uh, no hurry to increase your overnight risk on swing trading. It's a very sensitive and conservative approach to the overnight risk. So we're pretty comfortable right now on our shell and just taking short-term shots. I want to take a look at some sniper trades of the day. So today was an enormous gap down, which we knew from the futures was going to be like that. This was the worst gapper of the day, and I just want to show you what kind of difference your perspective makes on how you view trade opportunities. So this was Friday's close, and this is in ETHE. This is 3 minute charts. This little 10-minute box right here represents the OR10. That's the opening range 10 minutes. And we normally like to play a breakout in either direction from there. This orange line, the thin orange line, is the intraday VWAP. Notice how it, after getting to its peak, it rolls right back to meet the VWAP at the end of the day. And that most of the day it stayed above the VWAP and actually had some buying pressure pushing things north of the VWAP. But she had a ton of volume here and then buying pressure until you get back to parity. This was the point of maximum divergence. And this is the place where everybody who was aggressive to the upside, getting into around lunch, starts reducing their positions. And that's when the VWAP magnet comes back. You see the SMA 30, which catches up after the gap down, and then it rolls over and finishes right in there too. So in this case, this feels like not much room after the huge sell off. There's really not that much room when you're looking at the scale where all of your price action is here and two-thirds of the chart is blank space. That makes all of this price range feel really compressed. Um, you can see the 3 day and the 5 day anchored VWAPs. So there's actually quite a long move back to the longer term average uh, volume average price, volume weighted average price. So the big gap tells us to stop. But now watch what happens when if you don't have, emotional skin in the game like you lost that position. But if you can just say, hey, there's a big gap, I'm going to go put my standard box on it and I'm going to play it in either direction. And you don't worry about that. You just focus on the price that's in front of you. This is the size that blue box there is the OR10. And now notice what happens when you start uh, paying attention to the price in front of you. You get the OR10 breakout, you put a standard risk box on it. And now pretty soon you have a nice move coming. And after two legs up, you finally get a significant rollover in the OR10 and you exit with about a 3R win and then a COTA 2 reentry. which gives you another 2 R. So there's 4 to 5 R just in that first move. Now you can't short ETHE, you can short Ethereum, but the afternoon move was even easier to believe in. But there's 4 or 5 R, and then because of the visual scale that's in play, it becomes a lot easier to see what's going on. This is AMD in the semiconductor space. That also had a huge gap down, but it started taking off right away. And here's your OR10, and there's your buying on the breakout of the OR10. With a standard risk box for a little over about 2R. And if you don't want 2R, I'll take it. And let's see if we get this one. Here's EWZ, Brazil. Again, huge sell off. Excuse me. Huge sell off. And then there's your OR10. And if it doesn't fail further, you think maybe you can get back to close the gap. So there's your entry, standard risk box. It's grinding, grinding, follow the PSAR, exit at the PSAR for an R. And then that was enough. Now there was a tradable move in the afternoon, but scale is everything, and being judicious on a high volume volatility day like today is kind of key. Let's see how the traders did. This is Here's Jonathan crushing it for 2.67 on DIA today. Um, minus 2.5 here. There just wasn't any wiggle room. This was actually from Friday. Uh, we didn't get a chance to cover it, but yeah, there just wasn't any movement inside here, so there was nothing to get. That's the rules aren't wrong. It was that kind of day. That's what the rules are supposed to get. Here's Luke, who's finishing up the rules for his intraday system that trades the big indexes robotically and pulls in 22.3R standard collapsing dragon. Win. Three -1s, Hulk smash, um, for 22.3R. And that's not even adding second positions. I'm twisting his arm to hurry up and get that training course done. I think we're going to pitch it around 2,500 bucks because that is a beauty. And I think it'll come with the code that he's using for it, I believe. So keep that in mind. Look for the offer. Here's some more that later in the afternoon he was just smashing left and right and more. I mean, there's 8 in a row. Hamad does an excellent job today on squeezing an R out of XLK after the harsh sell off. No overnight risk. It's in play. Plays the OR10, gets paid for 2.5, and gets paid for 1. So we had 4.5 R today after that huge sell off just by playing and following the rules. Jonathan scratches in here basically on EWW and makes a little on DIA. All right, let's take a look at um, the daily reports. I just want you to notice this is the 150-day look back. This was the 150-day high and the 150-day low. So that magenta box right there gives you the range of the last 150 days. This black box gives you the 30. So notice that the 30-day box is about 60% of the size of the 150-day. That tells you how much volatility there is from here to here, all the way down to here. And then the 10-day box is almost as big as the 30, as is the 5. So when we look at that closely, I just want you to notice that all of the upside volatility from here, all the way grinding up to here, half of that disappears in 5 days. That's why we've got to be mindful and careful and respect the stops because they all look the same leaving the station. And now we're all the way back to the 150-day anchored VWAP. We're right all the way back. This was the maximum favorable excursion. And in about 10 days, it gave it all back. What took almost 100 days to gain. Now, the last time that it had a nice excursion and then pulled back to the 150, it set up this nice move. But there's something different about this size move. It feels materially different than that one. So I'm not expecting a nice, easy run up. I think there's more coming. Um, all the correlations are moving towards zero. Here's the Dow. Let's see, dashboard one. I mean, excuse me. Bullish, volatile, but really harsh sell-offs. All the big dumb indexes saying buy on dips. I'm going to be very cautious on that and respect the tides. These were all the big breakdowns today. Obviously, everything's going to be firing on the auto framer. I'd be favoring these three 5DDs as prime targets: Disney, JP Morgan, and Microsoft. In the ETFs, the bloodbath is even worse with the exception of treasuries. Everything's on the auto framer, basically. No squeezes as far as the eye can see. There's some details on your auto framer using the TC2000 bundle. Lots to choose from. All the techs are in there. And I just want you to notice some volatility stats in here. This is your some of the backup charts on market conditions from different angles. This is the chart of the standard deviation of price over the last 30. So that's rising sharply to the top of the yellow river, like at plus 1.1. It's one standard deviation above average. And you can see when you measure it by ATR divided by price, you're up around three SDs already. Extraordinary. And then finally, our little Z-score chart. You can see that uh, that the RL90 Z-score has rolled over. The 30's dropping like a rock, and then the 10 reversed and is making a downward move. So there's still a lot of potential downside here. All right, that's everything for tonight. Let's keep our risk measured and powder dry.